In the sales journal, we'll be looking at the business transactions affecting sales, whereby money for the sale has not actually been received by the business. From our previous experience, we now know that we're dealing with debtors. Let's have a look at the example. Firstly, you'll enter the invoice number of the sale, then the date of the transaction, the details of the transaction, which in this case would be the name of the debtor, the folio number, and then because we are dealing with sales, the first amount would be entered under the sales column, and the second amount would then affect the debtors column. Finally, we would add up the sum of each column, and this would then be posted to the ledger. In the sales returns journal, as with the purchases returns journal and the purchases journal, you'll notice that the format is exactly the same as in the sales journal. Once again, the transactions are affecting the same accounts and only in reverse. So let's have a look at the next example. We'll enter the invoice number. This will then be the same as the invoice number that was entered in the sales journal, the date of the transaction, and the details of the transaction, which once again would be the name of the debtor. We would then enter the folio number, and then the amount affecting sales and debtors. And then once again, we would add up each column.